The Dow just shattered 50,000. Oil is free-falling, and NVIDIA just stepped up to the plate to decide the fate of the entire tech sector. Welcome back to the channel. Today is Wednesday, May 20th, 2026, and if you stepped away from your screens today, you missed one of the most aggressive risk-on rallies of the year. After 3 days of brutal, headline-driven bleeding, buyers stepped in with absolute conviction today. But the real story? We are officially entering a new era at the Federal Reserve. The US-Iran conflict is hitting a massive inflection point, and the AI infrastructure trade is proving it's nowhere near dead. Buckle up, because we're breaking down exactly what happened, why it matters, and how you need to position yourself for tomorrow's opening bell. Let's get into the numbers. Let's look at the scoreboard, because the bulls absolutely ran the yard today. The S&P 500 jumped 1.08%, adding 79 points to close at 7,432.97. That is the third highest close in history, putting a striking distance from all-time highs. The NASDAQ Composite was the undisputed leader of the pack, surging 1.54% to close at 26,270.36. The Dow Jones Industrial Average made history, advancing 1.31% to officially close above the historic psychological barrier at 50,000.94. The why in one sentence? Equities staged a massive relief rally today as Treasury yields cooled and WTI crude oil crashed 5%, driven by rising hopes of a diplomatic de-escalation in the US-Iran conflict. When energy prices drop and bond yields take a breather, tech and growth stocks get a green light to run, and that is exactly the structural shift we saw across the board today. Let's rapid-fire the top 10 macro and corporate catalysts that completely rewired the market today. 1. The Dow crosses 50K. The fact, the Dow Jones Industrial Average closed above 50,000 for the first time in history. The impact? While pros look at the S&P, the Dow is the ultimate barometer for retail sentiment. Crossing 50K is a massive psychological milestone that historically pulls retail money off the sidelines and forces underperforming fund managers to chase the rally. 2. Oil prices fall off a cliff. The fact? WTI crude plummeted 5%, dropping back under the critical $100 mark to settle at $99 a barrel. The impact? Elevated energy prices have been the ultimate boogeyman for inflation over the last 3 months. A breakdown in oil immediately relieves margin pressure on transport and consumer discretionary stocks, while giving the Fed breathing room. 3. US-Iran de-escalation hopes. The fact? The massive drop in oil was triggered by headlines suggesting a potential diplomatic breakthrough in the ongoing US-Iran conflict that started back in February. The impact? Markets hate uncertainty. Even a hint of a ceasefire removes the massive geopolitical risk premium that has been chained to global equities for the past quarter. 4. NVDA earnings bellwether. The fact? NVIDIA climbed 1.3% during the regular session ahead of its highly anticipated Q1 earnings report, with Wall Street expecting $68 billion in revenue. The impact? NVIDIA isn't just a stock anymore. It is the macroeconomic index for the entire AI trade. A beat or miss here dictates the flow of trillions of dollars across the semiconductor and hardware space. Initial after-hours reaction was muted as traders digested their Q2 guidance. 5. A significant shift at Warsh's Fed. The fact? Comments circulating today from the new Fed chair Kevin Warsh signaled a potential structural pivot in how the central bank approaches liquidity and inflation targets. The impact? The Powell era is over, and the market is hyper-analyzing Warsh's every syllable. Traders are actively repricing the yield curve, betting that Warsh might offer a more pragmatic approach to rates if macroeconomic growth starts stalling. 6. The AI hardware squeeze. The fact? Sympathy buying ripped through the semiconductor sector today, with AMD, Super Microcomputer and ASML up 7%, catching massive bids. The impact? Investors aren't waiting for NVIDIA to give them permission. The continued flow of capital into AI infrastructure proves that Wall Street views the AI buildout as a multi-year supercycle, completely ignoring broader macro noise. 7. Hasbro HAS plunges on guidance. The fact? Hasbro stock collapsed 9% on massive volume, despite actually beating bottom-line earnings estimates. The impact? This is a classic sell the news, punish the guidance. Management was overly cautious on their full-year outlook, proving that in this market, backward-looking earnings mean nothing. If you don't raise guidance, Wall Street will liquidate you. 8. Kava Group, CAVA surges. The fact? Fast casual darling Kava Group spiked over 3% following a blowout earnings quarter that crushed estimates. The impact? Consumer spending isn't dead, it's just highly selective. Kava's strength proves that the middle-class consumer is still willing to spend on premium fast casual dining despite inflation fears. 9. Software and SaaS catch a bid. The fact? Battered software bellwethers like Salesforce and CrowdStrike CRWD recovered significant ground today. The impact? As Treasury yields backed off, the valuation models for high-multiple SaaS companies mathematically improved. It's a pure interest rate arbitrage by institutional algorithms. 10. Treasury yields cool down. The fact? Falling yields dropped in lockstep with the pullback in crude oil. The impact? Falling yields are the ultimate tailwind for the Nasdaq. When the risk-free rate drops, capital is forced further out on the risk curve, fueling exactly the kind of massive tech rally we saw today.
All right, let's talk price action, because today changed the technical landscape. The broad market, S&P 500, completely rejected the 3-day pullback. We saw a textbook liquidity sweep at the morning open, flushing out the weak hands before institutions stepped in and aggressively bought the dip. For tomorrow, the line in the sand is the all-time high set just last week at 7,500.24. If we slice through 7,500 on heavy volume, expect a massive gamma squeeze as short sellers are forced to cover. If we reject it, look for a retest of today's intraday lows as support. Stocks in play. NVIDIA, NVDA. This is the only ticker that matters tomorrow morning. With the post-market earnings reaction largely muted, the true move is going to happen in the first 45 minutes of the regular session as institutions establish their positions. Watch for a massive volume spike at the open. If NVDA breaks today's high, it will pull the entire Nasdaq up with it. If it flushes, look for a quick gap fill to the downside. Don't front-run this. Wait for the first 15-minute candle to close and trade the break. Hasbro, HASS. Hasbro is fundamentally broken on the daily chart. A 9% drop on high relative volume indicates major institutional distribution. However, stocks rarely drop in a straight line. Look for an opening panic flush tomorrow morning, followed by a potential dead cat bounce intraday as shorts take profit. If you are a swing trader, do not try to catch this falling knife. Wait for absolute confirmation of a base. As we look ahead to tomorrow's session, there are two specific catalysts you must have on your radar. The NVIDIA conference call fallout. The numbers are out, but the market is going to be hyper-focused on CEO Jensen Huang's commentary around agentic AI and Q2 margin pressures. Wall Street will trade on his tone just as much as the data. The $100 oil line. WTI crude dipping to $99 was the gasoline for today's rally. If geopolitical headlines shift and oil instantly spikes back above 102 or 103, today's rally will get sold off instantly. Keep one eye on the energy tape at all times. That wraps up today's breakdown. The Dow is at 50K and the AI trade is holding the line. I want to hear from you in the comments below. After today's massive push, are you buying the breakout, bullish, or are you fading this rally expecting a trap, bearish? Drop your thoughts down below. Make sure to hit that like button, subscribe so you never miss a market breakdown, and trade safe out there tomorrow. See you in the next one.